What's going on YouTube? Welcome back to the channel. My name is Baby Shaq and today I'm going to be teaching you guys how to trade using trend lines. Don't forget to like this video, comment if you have any questions or concerns, and subscribe to the channel so I can help you become profitable. Now let's get right into it. So what is a trend line? A trend line is a line on a chart connecting price highs or lows to show the market's trend. The purpose is to identify support and resistance areas in the market to prevent future market activity or prices. So how do we draw trend lines? In a downtrend, you want to connect the highest highs, and in an uptrend, you want to connect the lowest low. The more points that hits it, the stronger the trend line. You want to extend the trend line forward to spots that hit support or resistance areas. So how can we use trend lines? Trend lines are used as a visual tool for marking support and resistance levels. It helps with placing market entry and exit orders. A broken trend line may indicate a change in the trend. Although trend lines are useful, they are subjective. So traders may draw trend lines differently, meaning everyone is not going to see it the same. Trend lines should typically be part of a broader strategy. So while you can trade trend lines alone, it's better to trade trend line with other confluences or reasons as to why you think the market is going to go up or down. What is a major trend? A major trend is when a currency pair's price moves consistently in a dominant direction over a long period of time. So right now we're on the pair Euro USD. As we can easily see, price is headed to the downside overall. But the key is trying to figure out when the market is going to continue down, because at some point it's going to go up to then go back down. So that's where your trend line comes into play. So now that we know the general market direction is down, we want to find the area where the most points touch our trend line. So if we get our trend line tool, we take it from this high. We want to get where the most points are touching it. So right now that looks pretty good to me. You can also use a line chart as well to pinpoint it to the open and close of the candles. So now that we have that there, we can use this as an area that we can anticipate price to come back into before we look for another sell opportunity. So what you can also do is add some support and resistance lines as well to help you out. I made a support and resistance video, so if you haven't watched that, check it out. So if we're only using this trend line to trade, then we know that we want to see price come near this trend line and then give us a signal that it wants to go back down. So if we play price forward, we can see we got close to that trend line. And then right here, we have this red candle that also has this big wick to the upside. This big wick right here tells me that people were buying, but then sellers stepped into the market and overtook the buyers. So we have this green candle right here pushing to the upside. Then we have this big wick pushing to the upside, closing past the green's open candle and closing red. All this happening near this trend line lets me know that price may want to continue to the downside. And that's when you take your sell position. You put your stop loss above your trend line, and then you take price down further. We'll go for a 1-to-2 risk to reward ratio here, and we'll see how it plays out. As you can see, price dropped immediately and continued to the downside. If we add more confluences, we can also see that price took liquidity in this area, which means there was money up here. We also know that this is a support and resistance area. If we go to our line chart, we can easily see that we have this low and then these highs tapping in right here, support/resistance. So now that we have all of these things adding together, that equals a very high probability trading setup. So if we play this out one more time, we want to wait for price to get close to that trend line. And we want to see a tap of that trend line again. So now we're getting close to our trend line once again. And one of the biggest key factors that I want you guys to take away from when trading with trend lines is you want to follow the momentum. You want to follow the momentum. What do I mean by momentum? You want to follow strong price movements. So if price is moving strong away from that trend line or breaking through that trend line strong, then that means a new trend is either created or it's going to continue the trend that it's in. So once we get this tap once again, we want to see a strong push down or an engulfing candle. So as soon as this candle comes in, this is an engulfing candle because it's much bigger than the last candle and it covers it completely. That's what an engulfing candle is. So now that we get that candle right here, this big red one, that is our signal to sell the market once again. We also have all of these rejections right here in this area telling me that price wants to continue down. We also have a sweep of this high because price went above it, wicked it, and took all of these orders to the left. And now it's breaking this structural low. So if I take my short position tool, take another sell, put my stop loss in a safe place above this high, then we can target somewhere down here once again. And as you can see, the price plummeted once again. Now, understand that this is not a perfect strategy, and understand that every strategy has its losses. But as I said before, the thing you want to follow is the momentum. So if we play price out here, we want to look for one more touch. We don't get a touch there. You keep following the momentum. We start to see a strong push through our trend line. So we may have a new trend forming. So sometimes, just like support and resistance, this resistance trend line may become support. So we want to look for a bounce off of this trend line. So right here, you can see that this new smaller trend was created. We can see that this trend line is now broken to the downside. So I changed the colors for you guys so you can see it a little bit better. So right now, this trend line may become a bullish bounce, and this was a bullish trend line that was broken through. So now we're expecting a potential bounce off of this trend line because the trend was bearish, but it broke through this bearish trend line, creating a potential bullish bounce off of it. So now if we play price forward, we wait for the momentum, and there it goes. So once we have this big gap in price, or this big push to the upside, you want to take your trade right here. You want to put your stop loss below this over here, and then you want to set your take profit up to the highs. So if we play price out, we can see that we are now in profit once again. I'm not sure if that hit yet, so let's play it out. And there we go, another successful trade. Now, let's say on this trade, if you put your stop loss right here and you got stopped out, boom. Let's say my trade was right here and you got stopped out. That's a loss. You can see this trend line right here is being created. And this was a bearish trend line. But once we broke that and became bullish, this is your next opportunity to take another buy. So we have this bearish trend created that ended up, like I said, taking you out of the market. But then once it breaks this bearish trend line, you can look for a buy opportunity off of the new trend. So let's get our buying tool one more time. Let's take the bullish pressure or bullish momentum off of this candle right here, and let's take price up again. And as you can see, we got another win in the books. I hope you guys enjoyed this video on how to use and trade trend lines. Don't forget to like, comment, and subscribe to the channel. Don't forget I have a free Discord channel down in the description below. And hopefully you subscribe so I can help you become profitable. Till next time, I'll see you guys later.